Hello everyone, here are the latest market news on April the 13th, 2021. Air Canada receives major government aid package. Air Canada, struggling with a traffic collapse due to the COVID-19 pandemic, reached a deal Monday with the federal government on a long-awaited aid package that will allow it to access up to 5.9 billion Canadian dollars, $4.69 billion in funding. The agreement, the largest individual coronavirus-related loan Ottawa has given to a company, was announced after the aviation industry negotiated with the government for months. Canada's largest air carrier last year cut more than half its workforce of 20,000 jobs and reported a net loss of 4.65 billion Canadian dollars for 2020. The United States and France act much more quickly to help the major air carriers. Canada, the world's second-largest country by area, relies heavily on civil aviation to keep remote communities connected. The airline said it would resume service on almost all routes that had been suspended due to COVID-19. Grab to enter the biggest SPAC deal with U.S. firm. Southeast Asia's largest transport and food delivery firm, Grab Holdings, will announce a merger as early as Tuesday with U.S.-based Altimeter, valued at about $40 billion and leading to a public listing, according to sources close to the matter. The merger will make it the largest blank check deal ever. Grab's agreement with special purpose acquisition company SPAC, backed by Altimeter Capital, includes a $4 billion private equity investment pipe from a group of Asian and global investors, including Fidelity International and Janus Henderson. The companies are still refusing to comment. Grab, which operates in 8 countries and 398 cities and whose net profit rose 70% last year, is not yet profitable. However, it expects its largest segment, the food delivery business, to break even by the end of 2021 as more consumers switch to online food delivery due to the COVID-19 pandemic. Asian stocks rally on strong Chinese performance. Asian stock markets were broadly positive on Tuesday after Chinese exports rose strongly during March and imports rebounded, giving investors a hint that domestic demand is improving as part of the post-pandemic recovery. MSCI's broadest index of Asia-Pacific shares outside Japan rose 0.4% on Tuesday. Hong Kong's Hang Seng Index added almost 1%, while the continental CSI 300 Index rose 0.5%. Figures released on Tuesday show that China's exports in dollar terms rose 30.6% in March from a year earlier, while imports jumped 38.1%. The trade data helped turn around the weaker tone seen earlier in Asia after a decline on Wall Street overnight. In the U.S., the Dow Jones fell 0.16%, the S&P 500 lost 0.02%, and the Nasdaq Composite fell 0.36%. According to analysts, the U.S. economy could see a significant recovery this year due to loosening monetary and fiscal policy, but the country's labor market still faces weakness. UK economy boosted by possible quarantine easing. The UK economy grew 0.4% in February from January as companies braced for a lift in a third coronavirus lockdown, official data showed on Tuesday. Economists had expected growth of 0.6%. But the data also showed that the falling gross domestic product in January was not as strong as previously expected, down 2.2% from an initial fall of 2.9%. In addition, February showed signs of a partial recovery in trade between the UK and the European Union after the first month of the new post-Brexit trade relationship hit. The UK shrank by almost 10% last year, the biggest recession in more than 3 centuries, as the country was battered by the coronavirus pandemic. But the rapid introduction of COVID-19 vaccines has increased the likelihood of a setback this year and in 2022. Non-essential shops and open-air hotel complexes reopened on Monday, and Prime Minister Boris Johnson hopes to ease most restrictions on coronavirus treatment by the end of June.